The Accidental Entrepreneur is brought to you with the help of our sponsor, AWeber, the world's leading small business email marketing and automation service provider. Since 1998, AWeber has helped more than 1 million small businesses and entrepreneurs through its suite of web-based email marketing, automation tools, and education. AWeber, the best option when it comes to marketing your business. The podcast is also brought to you by the Alternative Board. Since 1989, the Alternative Board, or TAB, has been one of the leading peer advisory and business coaching organizations for independent business owners and CEOs across the world. By facilitating peer advisory boards, private one-on-one coaching, and strategic planning services, TAB helps business owners improve their businesses in ways that change their lives. And be sure to connect with our affiliate sponsor, GSM Growth Agency. They're boosting e-commerce businesses to 6 and 7 figures in revenue and cover everything from ads and social media influencers to making your website better. GSM Growth Agency focuses on taking businesses from startup success to bigger success, going above and beyond to make sure growth sticks around. They're all about cool ideas, lasting partnerships, and making your mark in the e-commerce world. And be sure to support the podcast by ordering some logo merchandise from our online store. Listen to all of our sponsors' commercials later in this episode and follow their links in the show notes to learn more about their products and services.
Going back to the very beginning, and I'm sure some people might correct me on this because it's my colleague who founded that business and then I joined later. But he's talking kind of early 90s, and his description of how that worked was you would literally, so they were registering things like UK county names. So there was no kind of cyber squatting, but it was that kind of thing. And his description of that was you would literally write to the registrar and basically give them justification for why you should have that domain name. So if your business happened to be based in Sunderland in the UK, then you might have a shot at registering sunderland.com. And creating a virtual community on that domain name or something like that. And I think once you could provide them with adequate justification, they'd then assign that to you. Obviously, things then moved on quite quickly.
Yeah. You are listening to The Accidental Entrepreneur. I'm your host, Mitch Beinhacker, and we got a across the pond, I think, discussion with Kieron. He'll be coming on in a minute. Talk about all the things that he's been doing. If you are listening on your favorite podcast directory, please leave us a 5-star review. If you are watching us on YouTube, subscribe to the channel and like us so we can keep connecting with the great guests that we've been bringing on, including Kieron. So let's get on with today's show.
The information provided in these episodes is for entertainment purposes only. It is not a guarantee of success or to be construed as advice of any kind. You should always seek advice from local licensed professionals before making any decisions.
The dictionary defines an entrepreneur as a person who organizes and manages any enterprise, especially a business, usually with considerable initiative and risk. People often start a business without much choice, perhaps due to a job loss or just being dissatisfied at work, and they come up with an idea they just know can be successful. They become entrepreneurs by accident. That is to say, their success or failure happens by accident, not with intention. My name is Mitch Beinhacker. I'm a corporate attorney and a business advisor. You're listening to The Accidental Entrepreneur, my podcast about how to achieve success on purpose, not by accident. Join me along with our monthly guests where we share our knowledge and help you get a hold of your business. And now on to today's episode.
Hi, I'm Kieron James, founder of Wonderful. We're an open banking payments provider, really leveraging this new technology to reduce the cost massively of getting paid. So if you're currently using debit credit cards to receive payments for your business, this is a super alternative. I'm really excited to talk a little bit more about that in the podcast.
All right, Kieron. So thanks for your patience at the beginning there, doing our little shtick. So you are in the UK?
That's right. Yeah, actually this afternoon, though, I'm not. This afternoon I'm in Spain, but my time's split between the UK and Spain. Normally,
my daughter's close to you. She's landing in Lisbon soon. So she's a country over. Yeah, fabulous. She was in Florence for a couple of months, and now she's going to Lisbon with my mom for a week, and then she's coming home, end of a semester abroad. So very nice. All right, so why don't we go into your background a little bit and learn about you and your entrepreneurial journey and your experience and all that kind of stuff.
Absolutely. Happy to do so. Yeah. Not necessarily accidental, although not also planned right at the outset. I started off doing a degree in economics. I was working in a trade association in London for a few years. From there into teaching, and then the entrepreneurial journey started pretty much after that. So what happened to kick me off was I was working out in the Middle East running a training institute in the Sultanate of Oman. And I was asked to put together some training materials, really, and also some marketing materials for them. And they were looking for those to be produced as a PDF.
And how did you end up there after?
How did I end up there? Well, I've always had the wanderlust a little bit. And so when I went into teaching, it was the idea of, this probably gives me a bit of geographic mobility because you can teach pretty much anywhere. Not really thinking that through too hard because a lot of those posts tend to be for, English, maths and so ever, and things like economics less so. So hence ending up in the Middle East and doing vocational training. So really leading an institute that was doing business type courses in Oman. As I say, that I was asked as part of that process in terms of building up the profile of the training institute to put together some marketing material, and they asked me to do that as a PDF. And this was 1998, so it felt like a really good time to be exploring the internet. So that was my first kind of dabble in doing anything online, learning a little bit of HTML, putting together a basic website. And when the Training Institute position finished, I ended up back in the UK. So hence kind of not accidental because I needed to find work, but it struck me that those skills would be a great thing to put to good use.
At that point, the internet was not very, I learned about it probably in 92 or something. It had come to Europe a little bit before then. So it was really in its infancy. It didn't have a lot of capacity, right, to do graphics,
for sure.
Things like that. Yeah,
for sure. I think my first brochure, actually, because we actually did promote the business offline a lot. So I put together a leaflet, and it was along the lines of, it's taken the internet a lot less time to get to 50 million users. Right. And so those are the kind of numbers we were talking about back then. Sure, it was a lot higher than that, but it was an interesting quote when you look at the kind of the penetration now of things like Facebook and so on. Yeah,
sure. The world. Yeah, absolutely. So, but they couldn't even handle this kind of stuff. Like you couldn't do heavy graphics and photos and things. I remember just one line at a time would load, waiting for this picture to show up or whatever.
Exactly. Yeah. I remember. I think still those are quite triggering. Those sounds that you sometimes hear of the internet dial-up modems. It takes me back.
Kids have no idea what that means. Yeah,
no.
Exactly.
No,
exactly.
Not at all. I remember doing a demonstration with some of my students when I was teaching. So we have been looking at the internet and then being typical cynical teenagers saying, yeah, it's really impressive, but it's pretty slow, isn't it?
You mean when you were in Oman?
Yeah. Well, actually, this predates that. I think we were starting to look at, it was obviously ahead of Google's time, but I think we were looking at a search engine. And I was kind of saying, isn't this incredible? You type in a couple of words and this is going off and searching millions of pages and coming back with the results. And they're all going, yeah, it's good, but could speed it up a little bit.
Yeah. I remember I had a friend years ago, I haven't seen him in years, but he used to speak in the early days about the internet, like what it was and whatever. And his kids, they were little. They were in their under 10, and they were trying to explain to their dad, it's like, somebody going on stage and trying to explain to people what a refrigerator is. Like we all know what it is. They weren't impressed because it was stuff they grew up with, and that's all that they knew, But I think in those days, so you were starting to do digital stuff then at that point, right? But it was kind of limited as to what you could do.
Well, it's interesting just listening back to a couple of episodes of your podcast and hearing the problem that we ran into with web design is one I think that lots of entrepreneurs run into, and that's the business of just getting paid. Yeah. So that was the challenge really, and I think it remains the challenge for a lot of people in that creative sector is that from winning a job to actually getting the money in the bank account can be quite a long process. Even when you feel like you've finished that job, the client saying, oh, can you move this? Can you tweak that? Can you change the other? And it just felt quite painful. And I think that was when my eyes opened fairly early on to the idea of doing kind of fairly automated product fulfillment, albeit digital. Right. I was registering domain names back at the time for these web design clients. And it suddenly struck me, that actually that process of getting paid where a domain name was being registered, but the money was transferred instantly at the point of that registration felt a lot less painful than building a website.
Right. But you're right. For small business owners, things have become very automated now. If you're designing, it's really for bigger clients, but their process is much more, you have people you got to deal with and layers of committees, and people review this and then they say, we need this changed and this page so it could be a long way from beginning to end.
100%. Yeah. So I think that was the thing that sparked that journey into doing anything that's zeros and ones, and we can automate the process. And that's been a common theme throughout the businesses really over the last 25 years. Pretty much since then, I think we went from that labor intensive work into putting a lot of work into building the model and then really letting that model run itself effectively.
But it was all payment systems at that point? Like your focus was on... No, it wasn't. Okay.
No. So early days, domain name registration was probably where I went next. We did some company formation online as well, which was an interesting area. In fact, that actually was very early because that coincided with doing some of that early web design work. I think we launched an online company formation business in 1999. And at the time we were looking for competitors and what they were doing, we literally couldn't find anybody who was doing that anywhere.
There was probably nobody online then either. And now even all the states are online. Like you can, with a little bit of skill, can go and form companies now in the United States, in any state in the country, directly through the departments of commercial recording. You don't even have to use a service, although you probably don't know what you're doing. But, it's very automated. But that, even with the domain registration, right, that was before like GoDaddy. Yeah.
Oh, yeah.
Way before.
Yeah. So we were in there, definitely very early days. In fact, the first model for the domain name registration, we hadn't even figured out what we were doing with it. So it initially was registering domain names and then selling them on. So it was kind of a second-hand domain shop rather than actually doing that integration.
So how did you in those days, what did you do to register them to create the domain?
Going back to the very beginning, and I'm sure some people might correct me on this because it's my going back to the very beginning, and I'm sure some people might correct me on this because it's my colleague who founded that business, and then I joined later. But he's talking kind of early 90s, and his description of how that worked was you would literally, so they were registering things like UK county names. So there was no kind of cyber squatting, but it was that kind of thing. And his description of that was you would literally write to the registrar and basically give them justification for why you should have that domain name. So if your business happened to be based in Sunderland in the UK, then you might have a shot at registering sunderland.com and creating a virtual community on that domain name or something like that. And I think once you could provide them with adequate justification, they'd then assign that to you. Obviously, things then moved on quite quickly. But he was in there early enough to register most UK county names and place names and generic domain names, things like taxis.com or whatever it might be. That's probably a bad example. It's not a literal example, but that kind of thing.
Exactly. And then people would buy them from you, basically, right?
Exactly.
Yeah, no, because now...
But then I think quickly we realized that if we could do the integration as a registrar into those registries... then that became a much more automated and slick model and allow people to register straight from the registry, which is, and I mean, we'll come onto this later, but it's pretty much how I registered wonderful.co.uk, which is quite a nice domain name for our business, but it was straight out of Nominet back in 1998.
Right, and then they would just go and put it into your system, and your system would automatically do it, and you didn't have any hands-on at that point. You had to write a letter to... and they would basically assign, it was really a number, right? So it's really, your website is really a number, a URL that's tied to whatever the word is, or words, whatever the domain's called. So that's interesting. So, but that's kind of what, even though it's automated, that's what GoDaddy basically does, right? You go to GoDaddy, you buy the domain, they make sure it's put in the registry properly through whatever authorities run all this stuff, right? Some wizard sitting on a chair somewhere behind a curtain. And then... Right, exactly. And then you get it back and then you're all set, but it's very automated. So, okay. So that was the beginning of kind of it wasn't into payment systems, but it was into automation, right? Ways to make things easier on the average person. Okay.
I mean, back in the day then we were because we felt like we had to give something in return for this domain name registration, we would literally print out an invoice and send it in the post to the person who registered the domain name, because we felt like we've got to justify taking some money off these people, because effectively all we're doing is joining those dots.
Right, exactly. Now nobody even.
And people expected it. It wasn't just an invoice. I think we actually printed out a certificate, but it was as valid as, this is the company saying that we've registered this.
Making it up. So you're giving them something, but nowadays nobody cares. They know they get it. They get an email receipt, and they don't even want paper. Yeah,
absolutely.
So it's funny that we're having this conversation, because in the last 2 years, AI has really gone through the roof, where you're able to automate all kinds of things that you couldn't, do before, that you can do on your own even. So it's interesting to have the conversation now. Okay. So that was early on. You're now building this company, both on the domain registration side and on the, what was the other portion of the business?
Company formations. Yeah. Two separate businesses, but similar principles.
Well, the company formations, though, you had to do by hand, right? I mean, they could do it through a website, but then you had to, at least in the States, you had to do that. We had to mail in pages, fax them in, whatever, certificates. They would get stamped. We would get back a seal. We don't even have gold seals in the United States anymore. It's all electronic. So in those days, you would get, every once in a while, you run into a bank that wants to see your certificate with the seal. And I try to explain to them that there's no such thing anymore, so you had to do it you had to do it by hand on the back end.
Completely. And what was happening again, I think your description of how the internet worked and the speed of things, and also people's patience. Everyone's now short on patience, including dwell times on web
I'm like,
pages.
how much if I have time now, it'll be 15 minutes, but it used to be weeks. You could expedite on the fee, right?
But with that company formation form, because the way technology was, we couldn't even kind of chunk that into various sections and save and complete later. I remember writing, it was just one long Perl script, a CGI script that just sat there and collected shareholder name, shareholder address, shareholder date of birth, registered office. It was a form,
a Google form nowadays, right? Yeah. Basically, it spits out the data, and
and then we process
it and put it into the form, which is kind of like
but even in those days, I think we were still kind of doing. We did two versions of the company formation. There was the digital version where you get all the documents as an attachment in an email in your inbox, or we would send you the paper versions as well if you wanted it and paid a bit more.
Right, exactly. Now, that stuff still done somewhat by attorneys in the UK, or not really?
We're kind of, there will be, I think you will get solicitors doing it, but typically we use company formation agents more and more, so specialists in that field. And now, in fact, you can go directly to, again, the company registrar, company's house in the UK and register with them. So, that's upset the competition a little bit in terms of that third-party provider in the middle. But they've had to look at different areas that they can address, such as company secretarial services or annual returns and company offices.
In the States, New Jersey specifically, but because I only practice in New York and New Jersey, but around the States, they've been simplifying these sites, making them more user-friendly for the average, because they're recognizing these small business owners don't always have a couple of $1,000s to go to a lawyer and get all these documents put together and everything. So they're trying to make it more and more, not that it helps me, but make it more and more friendly and easier to navigate, to the point where, some of these services, I use services for things out of state when I'm not admitted. If I have a client, you have a property in, Alabama, and we got to move the deed over from your mom to your name, we'll use a service to do it. There are, national services that do that stuff.
I think in the UK, you're probably sub £100 now for a company formation.
Yeah, here
probably in some places quite a lot, sub £100.
Yeah, I mean, New Jersey's it's only like $125 to form a company. But, then you might have to pay a service to do it, or you might pay an attorney to do it. So maybe it's $400 to $500. I think even through like LegalZoom, which I don't know if you guys have a UK version of that, it's still a few $100 plus the filing fee. Yeah. So it's not that cheap. But it's funny. I find that people form, it's a little bit off the topic, but people form these companies and then they do nothing with regard to like governance, right? They don't have a corporate binder. So we go to do things later on. I go, well, let me just see your binder so I can work on your stock certificates. Oh, well, we don't have any of that. I go, well, how do you show that you own the company? They're like, I don't know. Like I don't know, to ask our CPA. The CPA says, I have no, they had their tax return, I guess, but They don't have any articles of incorporation. They have a couple of pages from the state. That's it. And they haven't really followed any of the rules that they should follow. So
it's one of those very obvious questions that I get asked on podcasts about, you're thinking to the future about exits and so on. What do you need to think about as a new entrepreneur? And it's all of that. The one thing you learn through your first exit is just make sure all that paperwork's somewhere safe from day one and maintained and accessible and digitized. But I think we probably will be.
You'll appreciate this because it was with a UK company. So I had a guy who's a client of mine was buying this division, I guess, from a company. The parent company was in the UK, and they had, for some reason, like another layer in between. There was all these companies that owned different pieces of the company. So they were going to shut down the business in the United States. And my guy said, well, can I pay you something for it? I mean, and they're like, all right. And they didn't charge him a lot, but he wanted to continue the business. He was going to lose his job. So we did this whole thing. Getting these documents together was a nightmare. Half of them didn't exist. We had to recreate stuff. We had to get binders and things here and then stuff from the UK. And, I had an attorney. They needed a lawyer. So I had to get a colleague of mine who was in New York to represent them. And it was just there. And they had this whole chart they would show me. And I said, okay, well, these two companies, why do they own this? I don't remember. Well, where's the binder that shows where's the stock certificates that did? I don't know. Like they could find copies of some things. It was a mess. And people don't think it's a big deal, but it is a big deal. How do you transfer ownership to somebody you can't you can't evidence anything?
No, it is. It's a really big thing. And it's one of those things, that kind of just, I guess rudimentary admin is easy to say when you're not in the moment doing everything else running the business, but it is really important to keep on top of it. It's really important for that exact reason, because, if you are looking at any point at an exit and you're scuppering the chances of concluding that exit, then what's the point of doing anything? Or
if you even have partners, one of them dies and you got to transfer good luck. So if anybody's listening, corporate governance is a real thing for small business owners, and it is important. You don't have to deal with it every year, but make sure that you have, all that stuff done at least from the beginning. So when something comes up, you can go to your lawyer or your CPA and say, "Here it is. What do I do now?" And
I think the other point about that is it's one of those fairly easy things to outsource. You don't need to be doing all of that yourself. What you need is someone prompting you to make sure it's being done, who does understand all of that kind of thing. I remember someone commented to me quite recently, because I'm not great at that kind of thing. It's just not my area. It's not my strength. And you often feel like you've got a bit of an imposter syndrome as an entrepreneur if you don't do everything in the business.
Particularly correct, but that's how everyone feels.
Yeah. Exactly. It's not correct at all. And I found that it's been all of these years, but one of the most liberating things that was said to me was just literally in the last few months, which was the 6 words, "That's what you pay me for." And
right.
It's just great to know that and to think, okay, it's still getting done, but I'm letting someone else take care of it. I think that's really
the most successful entrepreneurs that I've met on the show, I'm sure you're included in this regard, do very little themselves. Like they're doing the big stuff, overseeing the development of the business and the direction of the business and so forth. And they have people doing the $20, $30, $50, $100 an hour work when they're doing the $200 or $300 an hour work, which is the way, businesses should be run. It's the ones that don't let go of anything that it's just chaos. People don't know what they're supposed to be doing. They're not buying into the vision. They're not committed to the company, and it's a mess. And sometimes there's coaches that get involved and consultants, and they're like, listen, we got to fix this up. So I don't know. It's crazy.
I think that's one of the hardest things as you begin to scale is that letting go and the ability to, because, you've always had the knowledge that the safe hands are your own hands, and it's quite difficult to let that go, but you have to do it. It's the only way you're going to scale. You can't possibly scale if it's all on you.
Absolutely.
It seems glaringly obvious, but it's also pretty subjective.
Absolutely. All right. So let's continue with your journey. So where did you go with these two companies? What happened with them?
From there, we went into telecommunications, which seems like quite an odd thing, but I'll tell you how that happened. When we were doing the company formations business, we were approached continually by people who felt like we were a gatekeeper almost to lots and lots of money with these newly formed businesses that, here's basically a great marketing list of people that we can sell our services to, whether that's insurance, whether it's PR or marketing or anything really, accountancy services. Give us your list because you must have a great list. And what was interesting about that was actually there were very few that really worked well. And when you, again, stand back from that and look at it objectively, you can see why a lot of these businesses don't have particularly deep pockets. They are brand newly incorporated, often one person.
Yeah.
So the thing that did work for us, and it was a moment in time without a doubt as well, was we were approached by a company that provided telephony services on a particular number range, which allowed the service to be provided free to the company using it, and the provider of the telecom service to receive revenue from the calls that were being made. So essentially, you were going out there to all these new companies and say, we can give you some really great telephony features like, voice to email services, time of day routing, fax to email services. Remember when we're talking about all of those kinds of things, and it won't cost you a penny because your callers will effectively pay for that.
The caller,
that struck us as a really good model.
The incoming callers were paying for that, or the outgoing callers?
So the people calling the business were effectively paying for the service by their call. So the way that they're making the call and the way the money then passed to the telecommunications provider meant that the person who was receiving the call, the business, wasn't having to pay for the calls at all.
Okay.
And we were able to provide services on the back of that. And we were able to exploit number ranges and provide some really, really great functionality that was effectively either free or really low cost to the business. So at certain levels, we'd have a subscription package. It would be nominal. It might be, $10 a month, that kind of thing. But for that would include 4 more users or an additional layer of functionality.
So this was like the early days.
And that, I'd seen that work with another provider in the company formations business to quite good effect. Right. But actually the execution of it didn't feel brilliant. So that was really what led me into telecoms, thinking we can do this. We'll get a third-party provider of the telecommunications the first instance and just build a really nice UI on the front and make it easy for people to sign up.
Was this kind of in the early days, like almost like voice over IP?
We weren't actually in those days. We weren't using. Well, no. Let me correct myself there. I think right in the very early days we weren't, and then we moved into voice over IP. We actually sat down and we were about to take a fairly sizable loan for some hardware, literally a telecom switch. And at that point we went, no, this is really changing so rapidly. We'll do all of this over voice over IP. So that's where we were with that.
Yeah,
business.
no, I think the early days of my law firm, we were looking to upgrade our phone system because it had been old. It was a PBX system, had a big board, all kinds of stuff, and it was dying. Basically, you would leave me a message and I wouldn't get it. So we started researching, and it was going to be a lot of money. We'd have to put in, those POTS lines, several lines that were going to come in. So because we had 6 or 8 of us, and you needed extra lines and the whole thing. So somebody said, "Why don't you consider voice over IP?" And it was still kind of new, but it was mature enough to you. I mean, it was like 1/10 of the cost of the equipment. Was no money, and the service was and so it was a no-brainer. Because we couldn't really afford, we were going to have to finance $10,000-$15,000 worth of equipment that would probably be obsolete in 6 or 8 months or a year, so, but this business came about really because it was an ancillary service to the fact that you were forming these businesses and knew them and were connected with them. And you said, well, we're not making much money doing this. Let's build a new service. So how are you guys getting paid then? You were getting a percentage from the telecom company?
Yeah. Correct. Yeah. So that's the way it works. And we were able to take that even further because the regulator in the UK introduced another number range, which was prior to this, you'd had to pay. Certainly, if you're connected via mobiles, it could be quite an expensive call because the mobile operators like to take as much money out of people as they possibly could. I don't know if it's the same in the US, but that they'd mark up, add no value to the call, but actually just charge people a lot to use it to make that call. And then our regulator introduced another number range that had to be treated exactly the same way from a landline or a mobile in terms of the way it was billed and so on. And that created another opportunity for us around conference calling because it meant we could offer a completely free conference call service to users So it literally cost them nothing. It would be bundled in their minutes. Any minutes they got from the mobile operator, they could use to dial in. And we still got a tiny sliver of an outpayment from the wholesalers. It was like a fraction of a penny. But the beauty of conference calls is you've got a lot of people on for a long time. So, that was the model for that we were able
residual
to
income as long as the service is being used. So the people using the service knew that they were paying, right, through their phone provider or whatever.
But the beauty of the 03 number, that number range I talked about now, is they weren't. Effectively, it was always included in bundled minutes. And on landlines and certain mobile providers, you were in a situation where you had unlimited calls and texts because the mobile operators were already keen to get you onto data plans and either charge for that or whatever. So effectively, you've got a completely free conferencing service, which was what we grew very, very well. I think the thing that we exploited and have continued to work really hard on is just that business had been easy to find, easy to register, and easy to use. It's those three things that have always been key to the businesses that we've been involved in. So back in the day when we were doing the telecoms, it was a different space entirely for doing things like SEO than it is now. I would say it's much more challenging than it was, 20 years ago. But we were super strong on most of the key terms. We were ranking number one for a lot of those key terms, which was very cost effective in getting those signups.
Right, because you were looking for them trolling through the internet. All right, well, let's take a little break. I'll play some of the commercials we have. I do have a couple people pay me a little bit of money every month, which is nice. And then we'll come back and let's talk about Wonderful and what you're doing with the whole payment system, because really you've just built residual income businesses, subscriptions and things like that on those same type of concepts. So in different industries. So let's do that. Let's take a little break and then we'll come back. Here's a word from our sponsors. Looking to market and grow your business? Or perhaps you're just getting started and want to hit the ground running? AWeber is the best choice for online email marketing and automation of your business. From maintaining a subscriber list to drip campaigns and landing pages, AWeber gives you tools and integrations that make marketing easy and fun. As our partner and sponsor, we use all their tools to promote the podcast and market our law firm. AWeber, the best alternative for online marketing. For over 30 years, the Alternative Board, or TAB, has built a thriving community of forward-thinking CEOs and business owners who want to radically improve their companies. Through unique combinations of one-on-one business coaching, participation in monthly TAB board meetings with other non-competing owners, a suite of strategic tools, and customized strategic planning workshops, TAB membership can deliver greater strength to your business and a better work-life balance for you and your family. All packaged in a streamlined and affordable service that the people at TAB invite you to try risk-free. Are you struggling with managing advertising due to a lack of time or expertise? Perhaps you're facing challenges in scaling ads for your store. Are you feeling lost when strategies have no success? GSM Growth Agency is your reliable partner in overcoming these business challenges. Feel the impact of collaborating with a team dedicated not only to short-term goals, but also to building long-term partnerships and achieving sustained success. Embark on an exciting journey to redefine the possibilities of e-commerce and create a legacy of unparalleled excellence. Take decisive action now. Follow their link in the show notes to receive a complimentary audit of your Shopify store conducted by a GSM expert. Propel your e-commerce game to new heights with GSM Growth Agency. Follow the link in the show notes to learn more about all of our sponsors. And now back to our show. All right, Kieron, we are back. All right, so now we were going to get into what you're doing now and then we can share some things, advice for people, things you've learned as an entrepreneur over the years, that kind of stuff. But why don't we talk about Wonderful and what it is as a payment system? And because you shared it to me a little bit when we first met, but I'm curious to really understand what you're doing.
Absolutely. Let me wind back the clock, because getting from telecoms to payments is again a bit of an odd route, and this one's particularly odd, and this one might seem particularly accidental because there's definitely a bit of serendipity about it. So 2015, my 17-year-old son jumped out of an aeroplane, and that's how this whole thing started. Nearly 10 years ago, he jumped out of an aeroplane to raise money for a charity. It was a teenage cancer charity. One of his friends at school had been diagnosed with terminal cancer. He and his mates were really, really keen to do something about it. So they did this parachute jump. And I often say, you look back at that day and you think, okay, a day your son jumps out of an airplane is probably going to be the most memorable thing that happened that day. Actually, it wasn't. The thing that I remember more than anything is him storming down the stairs later on that evening, furious with the deductions that had been taken from the donations they'd raised. So they'd used an online giving platform. He'd kind of gone into that, I guess you might say naively, but actually he's certainly not alone, believing that every penny raised through his fundraising was going to go to the charity. So he was kind of shocked and horrified when he discovered it wasn't. We kind of sensed his frustration and thought, well, it'd be really nice if we could do something about this. So I think 2016, following year, we got lots of things happening in the family, 50th birthday, 25th wedding anniversary. We thought, well, let's go a little bit further than just doing another fundraising event. Let's build an online giving platform. So my telecoms engineers back in the day, they were all super happy to get involved in this. It was a way for them to give back. It was they were giving their time completely free of charge, but it was lunch hours, coffee breaks, weekends. And we thought we'll build this proof of concept and see whether we can support the first chunk of money raised through that platform, through the telecoms business, make sure every penny went to the charities. And if we felt like there was an appetite for that, then we'd kind of push the button and in inverted commas, do it properly. So this was very much a proof of concept. Let's see if we can build it. And let's see then if the charities have got an interest in it.
All nonprofit, all no cost to the charity.
Every single penny raised goes to the charities. We'd cover any costs. So, and the costs really, again, think about where we were. We were operating with great engineers in data centers. So hosting it wasn't a problem. It was going to be essentially free for us, or certainly absorbed in the day business. The principal cost was card processing, and you can see where I'm going with this.
Right.
But essentially that platform, what happened was we created a bit of a success paradox. It took a while to convince the charities that we were, not up to no good, that it was a genuinely philanthropic thing. There was a degree of skepticism about our motivations, but genuinely, we just looked at that and thought there are amazing people doing brilliant things every day with very good intentions. Wouldn't it be brilliant if there was a platform in the middle of that supported all of that fantastic work? I mentioned wonderful.co.uk. I'd also registered many years earlier wonderful.org, which felt like a really great domain to put this platform on. So we'd finally found a good use for the wonderful.org domain name. We built the website. The charity is initially skeptical. Then we have a website in the UK called the Money Saving Expert, which is a very popular, probably top 100 UK websites, and it advises people on how to save money. They did a comparison piece on fundraising platforms. There was no way they couldn't rank us number one because we're the only one giving every penny to charities. So they put us number one, and the floodgates opened. Suddenly we were handling so many charity applications. It was a bit of a nightmare. That's when the success paradox came in, because we'd already found a bigger corporate sponsor. We had a high street bank that was now sponsoring the platform, which was great. But what happened was, as the charities and donors and fundraisers increased in numbers, we just found that literally every penny we got through corporate sponsorship was just being handed over to card processing providers. When I say every penny, I'd be confidently saying 98% of our corporate sponsorship budget went on card processing.
Cover the purchase. Because nowadays, I don't know if they do this in the UK, but more and more in the United States, people are passing on those fees to the purchaser. So if you're making a donation, they'll say, well, if you want to pay by credit card, 3% is added to cover the processing fee. But in those days, we weren't doing that.
No, but actually, in those days they were, and it was even in the UK certainly, and it was even worse because the figures that were being charged for card processing seemed to be much higher than the rates that we were getting, doing much smaller volumes than some of the bigger platforms, which never to me made much sense
money
at
on
all.
it. They were charging.
Well, I wouldn't want to say that, but it certainly looked odd. So we basically got, you go to a platform, you'd make a donation, you'd have a deduction to cover the platform fees. There was a gift aid scheme there still is a gift aid scheme in the UK, which is like a tax incentive. There was money being taken out of that to cover costs of running the platforms. And then on top of all of that was the card processing fees taken as well.
Do you remember roughly what they were taking at per dollar? Were they taking 15%, 20%?
The platform fees when we started were 5% of the donation, and then there was an additional 1.4% for card processing. Now, I got a feeling through a number of the podcasts that I've done with US hosts that you're probably paying more percentage-wise per transaction in card fees than we do in the UK.
Between 3 and 5% if they're, depending on the industry they're in. Yeah.
Now, typically here, I mean, certainly headline rates for Stripe, for example, in the UK, I think 1.4% plus 20p.
Wow. Okay.
So, we'd looked at this, we'd wanted to grow, but effectively this card processing fee was creating this really low ceiling rather on our impact and reach. So it just meant that, we either got much bigger corporate sponsors with much deeper pockets, or we were stuck where we were.
Okay.
And what happened next was we, again, quite serendipitously found open banking was a solution to that problem. Now, if you're unfamiliar with open banking, I'll talk about that. Okay. So what happened in the UK, and I think the UK has led the field on this. It's not often we can say that these days, but really it has. In open banking, we feel like we've led the field, and I think there are now 60 different jurisdictions that have adopted a similar model. Okay. This was an initiative introduced by the Competition and Markets Authority to really stimulate some innovation in the banking sector. And it fundamentally what it allows us to do, and we are now an authorized financial conduct authority, authorized payment institution. It allows us, with that role in place, to connect to the bank's APIs to do any number of things. But the most important is, with the consent of a consumer, we can move money from their account to the recipient account, which would be a retailer, or in the case of the fundraising platform, we're moving money directly from the donor's account to the charity's account. Okay. And that, when I say directly, I also mean there's an instant settlement there, which is really, really important as well, because there's no kind of cash flow issue here. The moment that consent is given is pretty much the moment the money arrives in the recipient's bank account.
As opposed to waiting 2 days or 3 days.
Now, the real beauty of that, I mean, there are many, but the real beauty of that is you're removing about 15 intermediaries from that process.
Well, that's why it takes so long, right? Yeah.
And that's why it costs so much, because you have so many mouths that have got to be fed along the way.
Of course.
Whether that's the banks, the card issuers, or interchange providers, whatever it might be, there's a lot of people there in that flow. With an open banking payment, what you're doing is removing all of those, and you've just got one. In our case, it's us. So there's just one intermediary sitting between the donor and the charity, or the consumer and the retailer.
Right. Okay.
So that's how we got into that. It was that serendipitous moment of we think we found a solution to this card processing in open banking. And then what we did next was quite brave, in that we said, let's sell the telecoms business. All of those people doing that fabulous work on their lunch hours and coffee breaks can now make that their full-time job. Let's move the whole team into a newly incorporated payments business, get our FCA authorization, and start to roll this out as a commercial service, as well as solving our charity fundraising problem.
Right. Okay. So meaning, how are you going to make money then doing this, since you're doing it for free on the charities?
So on the charity side, it's free. On the commercial side, it's just highly aggressively priced. So we are much, much cheaper than a card payment.
So you're
to give you a perspective. Yeah. Our model is we are at a penny a transaction with no percentage fees. So, it's massive. Right. Again, legitimate context for that. Yesterday one of our customers sold a used car through the website, through our payment provision. By our calculations, £370 saved on that transaction alone. So instead of it cost him 370 quid to get the money into his bank account, it cost him a penny. So it's pretty
You're
huge.
working on huge volume then in order to, right? I mean, is that what you're relying on if you're...
We're not relying on huge volume because, well, we are to an extent, but it's more of a subscription-based model that we're adopting here, which again is pretty groundbreaking in this sector. So what we'll do is provide payments as a service in the same ways you might pay for any number of services on that subscription model. So we're offering for an SME, for a small business in the UK, 1,000 transactions a month for £9.99.
All right, let me make sure I understand this. So, but you're processing credit card transactions, right?
No. There are no cards involved. Cards, cards for us are a dirty word. So there's
like
no
bank
cards
to
involved
bank,
at all. This
right?
is bank to bank.
Okay, so is it similar to like some of these services in the US? I have one at my bank called Zelle, and I put in use your email address, and it will move money from my account to your account. There's no charge to me or you. Somebody's making money somehow. I don't know how, but that's basically what you're talking about.
It's a similar. It's not the same technology. It's a similar technology. The underlying technology for open banking is something called faster payments in the UK. Okay. But what we're doing is we're removing the need. If you think about a traditional bank transfer, I'm sure it happens the same in the US. If you were going to do this, you might be asked by the recipient for a routing number, an account number, the name on the account, the bank, all of those kind of details. If it was an international, it might be a SWIFT number or all of that. With an open banking transfer, because all of our recipients are registered with us, we know where that money is ending up. So, we've done that due diligence. We actually do that all again completely digitally by using our open banking permissions to link that account directly. So we're not asking for bank statements or anything like that. It's literally all done, again, using a mobile banking app typically. So you'll log in and you'll give us consent to put money in your account. And you'll log in probably using your mobile banking account, using biometrics. So we know it's you. We know you've got access to the account. And we then do all of our normal due diligence, KYC type checks before we onboard you as a merchant.
Okay.
Now, as the payer, all you're doing then is saying, this is the amount I want to pay this recipient. You don't have to enter any details because we've got all of those. And then you're effectively giving us a token for that one payment. So again, the beauty of this is we're not asking for any information whatsoever from you making the payment. It's literally, do you consent to giving £25 for this pair of sneakers to this company? And then that's authorized in your mobile banking app or your online banking app. So you'll log in there, you'll see the payment pre-populated, and all you do is say, yeah, I'm happy to pay Mitch $25. But you've not entered any
But it's
details.
almost like me as the merchant, if I'm sending like an electronic invoice and says, hey, Kieron, pay me $25 for this sneaker. You authorize that, and then the system takes care of the money transfer.
Correct.
Yeah, it sounds...
Yeah, broadly that's it.
It sounds similar to some of the systems. But so can this be done at point of sale in a store?
Exactly. Without checking the details too much, I'm pretty sure that's how the car I mentioned yesterday is sold through an app that we have on the mobile phone of the retailer. So in that scenario, the simplest way to complete that transaction would be through a QR code. So the scenario would be the car dealer would enter the amount that he wants to charge for the car, then click a button that generates a QR code on the phone. He just displays that to the recipient. The recipient scans the QR code, chooses the bank, and confirms the payment. So it's pretty trivial. Right. And in due course, what you're going to see, I think Apple have announced the admission of third-party providers into Wallet, for example. I think that was announced at the start of this year. So it'll be a while before it happens. But in due course, you'll see exactly the same technology being adopted in the wallet, so you'll be able to use this for contactless. So instead of linking your contactless payment to a debit or credit card, you could link it to us, and the money's moved with no cost, or a tiny fraction of the cost.
So this has to be not well welcomed by the payment processors, mostly Visa, MasterCard, and American Express, and I guess Discover. I think Capital One in the United States is trying to buy Discover because they have their own processing system. That's how you make all your money, through those few percentage, whatever piece of the fee you take. Some of it goes to the bank, some of it goes to Visa, MasterCard, and they operate on huge volume. So I would think this is a huge threat to their business as we start more and more of these systems?
I couldn't possibly comment, but yes.
You will feel it soon enough.
But yeah, without a doubt. I mean, and I think there will be, we see huge challenges in terms of getting the adoption, because there is a lot of vested interest in this not working, at least not working soon.
Sure.
For sure. And I think the writing's on the wall. So there's a sense that this is going to happen. We've seen things like in the UK, HMRC, equivalent to the IRS in the States, is a massive evangelist for open banking, because, of course, it's solving so many problems for them in terms of collecting tax. One, there are often large payments made at the end of a year. And so you're moving a significant amount of money. Typically what you've done is you've gone into the HMRC website and entered that sort code and account number and your reference number, which might be 19 digits long. And you're sitting there typing, thinking, I'm about to move £5,000. I want to be really sure I've got these details correct. Right. So not only is it solving that problem because there is no detail to enter, I'm now confident that this money is going to go to HMRC, solves that problem. But even more importantly, it's saving UK taxpayers millions and millions of pounds. Right. So, nothing's going to stop this. It's going to happen, and it is going to be universal. Right.
So does that mean the credit card processing system industry basically collapses at that point? I mean, there's no way to... I guess there's certain services like American Express and whatever that bring other ancillary services to their customers who pay a fee. We use a platinum card. We can travel. We get all kinds of special things and points and whatever. But at some point, I'm going to be the one paying the processing fee. At least in the United States, 3% is the most you can charge if you're following the rules. So as the consumer, so then, I guess I got to choose between, do I give up the rewards, the benefits of being in the system, and they're going to have to provide more and more to keep me there, versus the thousands of dollars that I might be paying in processing fees when I could do it for free, right? Because I can't imagine. Now, what about security? People must say, well, is this secure? How can it be hacked?
Let's just circle back to that point before we move on to security. I'll try and keep it brief, but it feels like a last line of defense a lot of the time, the whole loyalty scheme. And here's why. If I'm a retailer, then I get no benefit from American Express's VIP lounge. It's not benefiting me at all. So all I'm doing is paying inadvertently for their loyalty scheme. It's got no direct benefit for me whatsoever. So if I now save 95% on my costs of getting that money into my bank account, I put together my own loyalty scheme with that money, and it's much more effective for my customers and therefore me. So, for me, it just always feels a little lame to talk about VIP lounges or access to concerts and things. It feels like, well, what else have you got to defend this on now? That's my very cynical.
No, you're right, because you're talking about the mass of the people supporting the use for a small portion of the group. I understand that.
Completely. Completely. And in terms of security, again, there are a number of reasons. We talk about strong customer authentication a lot of the time. So with cards, my analogy is often that you're seeing more and more bolts and locks being added to the door because that secure customer authentication isn't inherent in the process. Right. What do I mean by that? We started off with a credit card when we were doing the knuckle duster approach to swiping it. I think there was a view that people were going through bins and getting those receipts out, and you got all the information you needed. You could see the signature, the 16-digit number, the expiry date. So we then thought, well, let's add a CVV number to the back of the card, and there it won't be on that swiped transcript effectively of the card. So CVV feels like an afterthought that solves some problems. It's on the back. We're going to have to look for it. Then we move from there into, this still isn't working. Let's put together some kind of security system in an e-commerce environment where I've got to guess what's in this picture, and then
I know.
It just all feels very, very much like a bolt-on. And then we move from there to one-time passwords. I'm going to send you a text with 4 digits. Now you
have two-factor authentication.
Two-factor authentication. Right. But even that, if it's going to be an SMS message, we've got the problem of SIM swapping. How secure is it? How easy is it to hack that? So we then go to, I'll tell you what we'll do next. We'll have disposable 16-digit cards that you only use once. All of this feels like it's got to be put in place. An open banking transaction is inherently secure because you are basically authenticating that by logging into your mobile bank. So unless somebody is waving the phone at your face for biometric data saying, log me in here to this account because I'm going to steal some money. And actually, I can't really steal the money from you anyway unless I'm the merchant.
Right.
Because that's the only place that money is going to end up. You're talking about a tokenized payment that can't be revoked once it's been consented. It can't be changed. It's going to go to one place and expires in a few seconds. Right. If you compare that to, I've left my debit card on a bar in a bar.
I wouldn't compare it.
Someone's picked it up within an hour. They've done a lot of damage with contactless payment. So for me, it's inherently much more secure as a system.
Yeah. So, but if somebody's hacked your phone, let's say they have access to your phone, they're cloning what you're doing, they're watching your transactions. If you authorize a payment, it could be a fake merchant, right? I mean, it could be.
But that assumes two things. It assumes one that they've done that, and I think it's a bit like some of the banks you were talking about. Is the resistance, and some of the resistance again oftentimes feels a little cynical, where people they've been given warnings in the mobile banking apps to say, are you sure about this? Are you sure you know the recipient? You'll have seen the same kind of thing, I'm sure, in the US. But we see that at places where it feels completely redundant because we're an authorized provider of service. So the only way you've reached that page through us is by you consenting to give us permission to get you to that page in the mobile banking app. Therefore, it feels redundant for the mobile bank to be saying, has anyone asked you to do this? It's as redundant as them saying, has anyone asked you to open your mobile banking app? And if we get to that point, then, I kind of genuinely fear for humanity.
Right, because somebody's standing there with a gun to your head and you're like, yes, boom.
Yeah.
Exactly.
Yeah, well, and exactly. And if that's the case, then let the transfer go through. But the reality is, you would have to have access. And in the scenario that you're describing, you'd have had to create a fake merchant with us, get through all of the checks and balances we have in place when we're onboarding merchants. And that be the merchant that the consumer that you've now waved the phone in front of wants to pay. So it all feels a little unlikely.
It's an extreme because you don't have so many parties involved. You don't have 26 different people that you're funneling through. It's interesting, right, to see where the business goes. So what's the future of what you're doing? Like where are you going with this whole thing? You're just building the platform and trying to get more and more people. You're just in the UK now, or you're throughout Europe?
We're just in the UK, and that's because our market I mentioned before is predominantly SME. That's where we want to make our play because we've just been doing it for so long in so many other sectors. Whether it's telephony or domain name registration, it's always been pretty much SME focused. We've got 5.5 million of those in the UK to go at, so it's a pretty big market. Way we want to roll out is fairly clear in our own minds as well, which is about getting integration into a lot of the platforms that these small businesses are using, whether that's e-commerce platforms. So our first integration that's now live in the UK is with WooCommerce, which is actually the biggest e-commerce provider in the UK.
It works with WordPress. Right.
That's right. So unless the numbers have changed recently, I think it was a percentage point ahead of Shopify in the UK in terms of adoption. So it's a pretty big, about a fifth of the market from what we can see. Then we'll go to all of the others as soon as we can and as soon as they'll let us, because again, there's models in place there where they're earning money from their card processing fees as well. So, it's not always easy. Accountancy software as well, people like QuickBooks, Sage in the UK and Xero as well will integrate with those. So again, I think you described before you're doing your invoice run, you've got a link at the bottom of the invoice that says tap here to pay or click.
Right, exactly. Yeah. So that would be, if I'm running my e-commerce store using WooCommerce on a WordPress platform, I can integrate your payment system in there and save all the processing fees pretty much.
And the beauty of this as well is we're not saying, assume all of your customers are immediately going to swap over and use open banking. This isn't a this or that service or solution. This is a this and that. Yeah, exactly. Give them as many options as they like, but promote the one that's going to make most sense to you. Because what we've found as well is that there's kind of a 85 to 90% return rate. People have that initial fear factor. It's a new technology. Of course you do. But once they've done one, everyone's going, actually, that was really easy and straightforward, and clearly it works.
Well, that's the adoption of everything, right? When there's enough people using it, people start saying, no, the same thing with Venmo and those types of things, which aren't that secure, I understand. Your money's sitting somewhere else, your points, it looks like, doesn't even look like money, sitting somewhere else on a server. People could take it. It's not even connected to your bank. They're taking the money and then you have to transfer it. So, but,
That's One of the great things about open banking, and certainly our implementation, I don't think we're unique in this, but there are certainly other open banking providers that take the money and then later pass it on. We don't. We literally connect those two bank accounts and
right
go
away.
bang.
Yeah, I mean that's what Zelle does, but Zelle, I don't think Zelle is a payment system. I don't think right now it allows you as a merchant to make payments through it. The only way to do it is it's from account to account. It's from bank to bank. If I want to transfer money, if a client wants to pay me my services, they can go into Zelle and they can put in my business email address and it will transfer me the money. But if I'm a point of service, I don't think it would be hard to do. So I'm going to quit there, but I would assume they're probably going in that direction also because, what do they need? Well, they make money on Visa, MasterCard, so they probably don't want to get rid of it all. But you're right. Like if they see it coming, right? If they have to, you can't beat it. You're going to join it because you want your customers.
Well, I think you've got to start to Yeah, you got to explore different revenue models. I think that's going to be the ultimate.
Yeah, you wonder, the bank says, oh, well, we can't be a bank anymore. We don't make any money. But they make their money lending money. I mean, that's really what,
Absolutely.
That's what happens. You put your money there. You're loaning it to the bank. I know people listening think that my money's in a shoebox on a shelf in the back room at the bank, but not the way it works, right? We know that. So you're loaning them your money. They're paying you a little bit of interest, but they're making more loaning it out to other people. So that's the model and the way it should be. We shouldn't be paying to all of our transactional fees where they're making billions of dollars. It's ridiculous. Yeah.
No.
Yeah.
And, I think on top of that, you often find that charging you administration fees on top of the fees on top of the other fees, it just all feels a bit much.
Yeah. I mean, there's a lot of services like that, right? That have all kinds of fees that add up and cell phone bills and things like that. So what does your company look like now? Do you have a lot of employees? Are they virtual or, in terms of running your company and the challenges that you face as an entrepreneur?
We've been remote for a while. We have a great solution in that we're based at Rise, which is a fintech hub in London. So it's exclusively fintech businesses in that centre. So fantastic for networking, really great events. One of the best decisions I made actually to go into Rise. So I'll just give them a free plug. Not that they need it because they're operated by a bank. But yeah, we're in there kind of once a month for meetings, but most of the time we're remote, fully remote.
And how many people do you have work for you full time?
We're at about 8. That's all. We're pretty lean.
Okay. So, and some of them they're programmers, or the programmers really contracted?
No, the programmers are full time. All of them. We have one contractor that we work with on some of the mobile app development, but again, we'll probably bring that in house in due course as well. I've tended to do that through all the businesses. That for me is such a key resource and so important that I'd prefer to keep it in house. It's personal preference. I know people have different operating methods, but that works.
Yeah, I mean, the industry matters too, right? I mean, it's probably easier to manage people that are technology based because they're familiar with technology. It gets hard to stay connected with people on a platform when they're like, oh, I'm used to being in an office and walking by your desk and, so forth. I guess you don't find those challenges because you're in fintech, right?
That's true. And we also, I should add, we also have the regulator piece in there as well. So they need to be aware of who's working on what and people being authorized and given permission to do that kind of thing too. So it's not as straightforward as just bringing in a contractor. We can do that to a degree, but it depends what they've got access to. But yeah, the remote thing, I mean, we moved from Slack to Discord a little while ago. It does much of the same thing, but we just find we spend a lot of our day either chatting through text or just doing quick video calls where they're required. Yeah. So the usual kind of remote working approach with scheduled meetings and a lot of ad hoc stuff that just goes on as the day unfolds.
All right. So we've been on, a little bit more than an hour. So do you have any advice for entrepreneurs out there? I mean, maybe about what you're doing in the payment system, but, any advice in terms of your experience? Because you've been in different businesses. They've kind of been related, but, in terms of building a company.
I mean, again, it might sound glaringly obvious, but it's taken me 2 decades to realize that you need to do it. It's to just take a break, literally make sure you schedule some time for yourself. And often you'll feel that that's a selfish thing to be doing, but there is no doubt about it that will benefit your productivity, your relationships with your colleagues, with everybody. So if you feel like things are getting on top of you, just, step out, even if that's stepping out for an hour going for a walk, getting some air. But I couldn't stress the importance of that more than anything else. Startup life particularly is frenetic. It's changing all of the time. It's demanding. And often we'll just work ourselves, almost literally into the ground. We've got to be super careful.
I think entrepreneurs think that that's what you do. You work 40 hours a day. Your fingers bleed, and that's like but that's not sustainable. Is the problem. So what's a good way for people to connect with you, to learn about what you're doing, to learn about, Wonderful and the system that's coming? Because I think in the United States, we will see it. It'll hit our shores at some point. So what's the best way to connect with you?
Domain names are really obvious. Wonderful.co.uk, wonderful.org. We've mentioned that's the fundraising platform and the payments provider in reverse order. I'm on LinkedIn, Kieron James, which is Kieron. And my blog, if you're remotely interested in anything personally, is at Kieron.net.
Okay, good. And we'll put all those links in the show notes. But I can't thank you enough for joining me. It's 11:35 here. So what is it, like 6 hours later there or something like that?
Yeah, we're at 25 to 6 p.m. in Spain.
Got it. Okay. Well, thanks again. And I'll be watching to see what happens with our transactional system in the future. I'll be like, Kieron told me this was happening, and here we are, right?
It might be my pleasure entirely, honestly. Thanks ever so much.
All right, thank you.
Appreciate it. Take care.